All right. My name is Reuven Orr. I run a educational trading group called Trader Boot Camp, and I'm doing an impromptu, off-the-cuff, on-the-spot webinar for Giving Tuesday. I just put in Facebook because that's everyone's trusted and loved momentum stock, though Apple's probably more loved, but Facebook is more of a risk. So it gives us a little bit more excitement in the webinar. I was an investment banker from the dot-bombs through the mortgage crash and have been a pajama trader from home ever since. Profitable, and I've been trading for 10 years, which makes me an expert. So I have no idea what this webinar is going to be about. Let's see what happens. All right, Facebook, 3-year month. This is the entire monthly view of Facebook from the IPO until this current month that just started, December. On the right-hand side, that's December, the red. And the IPO is the big red. I'm not going to use volume. I'm not going to use any indicators. I'm not going to use anything except for price and price action. And I'm going to keep it simple. And let's see what we come up with. All right, so just by looking at this, we can see that it traded sideways for about a year, and then it got its boost in July of 13, and it's been going up ever since. And then come September, it started to go sideways again. So just like waves of the ocean have big waves, medium-sized waves, little waves, ripples, and then, you know, everything else in nature is repetitive, the stock market is a microcosm of the universe. So just by what I said and see here, we should see sideways action in Facebook for a year. I don't know if that's going to happen. I don't even know if that's a true statement. But just by looking at the past price history, it went sideways for about a year, and now, starting September, it should go sideways until next September. That's what this is showing us. Then, because stocks, what they like to do is they like to advance and then take a rest. Advance and take a rest, just like I mentioned the ocean. It's the same thing. Waves go up, waves crash. Waves go up, waves crash. The stock market performs in the same exact nature as that mentality. So you have the, you know, right here, the beginning year would be your, you know, low tide would be your calm ocean, and then all of a sudden you got, you know, big wave, and now you see it starting to curl over a little bit. It's not curling up, sort of curling down, so to speak. So that's our wave. This is our big wave. This is our big wave here, and it's starting to curl a little bit. So we might even get some sideways to down action coming soon over the next couple months, is the way that it's indicating. And then if we were to take a line from the absolute low of this stock to the absolute high, every candle, if you're not familiar, these are all called candles because they look like candles and they have wicks. The green obviously are all people who are greedy, and the red are all people who are fearful. And so if you take a line from the absolute lowest price of this stock to the absolute highest price of this stock, you notice that we'll call that the mean or the median line, and you notice that it hugged it Okay? And then so whenever price comes off that line above or below, it's above or below the median price, so to speak. So currently, using that mentality, we are below the median price or value, and it should continue overall. If I extend this to the right, it should continue upwards into the future. Now, when I say it's going to go sideways for a year, it very well could, but then after that year, if you notice, here's that year, September right here. It could go sideways till here, but as you notice, that's way below the mean, the current mean. That could change. If we get a higher high, then you know, I'll draw the line different, but that could change. But we only went below the mean for about 6 months. See that? 6 months below the mean. So we already have 4. So that tells us we only should get 2 more months below the mean before it starts to go up and be attracted to this line like a magnet. Stocks work like magnets. They have memory. So if you look at it that way, 1, 2, 3, 4, 5, 6, and then it went up. 1, 2, 3, 4, we should get 2 more sideways, and then it should go up to this mean line, so median line. So that would be February, December, January, February. And then in February, then in March, it should go from 75 and then trade up to 92. All right, so 92.50. So this line of thinking, you can put it on your calendar and hold me to it. I'm predicting Facebook is going to 92.50 in March, based upon the prior price action under the median average from low to high of the entire life of the stock. And then, like I said, it went sideways for a year, so we still have to keep that in mind. So even though we're going to go sideways for 6 months and then maybe go up back to the line, we could also not do that and go sideways for a year as it did and then go up. And if that happens, then we'll go sideways to September, like I said, stay around 75, and then go up. And then when it goes up, it's going to go up to 105. So my two, I mean, I don't make predictions, but my 2 assumptions based upon just the right there, that knowledge that I just created, either March, it's going to 92.5, and if it doesn't do that, then it will or could or should go to 105 next September. That's based on the monthly chart. Every candle is a month, as I said. All right, and then let's drop it down one time frame. This is weekly. So every candle now is 1 week. And we still have the obviously the same high and low of the life of the stock. And let's see how things look differently. Still got the sideways for a year. Ran up to the median. Little swoops. And then right now, we're going sideways since September, as I said. And yeah, same assumption should happen. March 91.5 or not 91.5, and if not, then September 105. Just looking at this and the behavior of the weekly, it's similar to the monthly, and you got a swoop. See this? That's a swoop. That's very bullish. When that was happening, we all hated Facebook at the time. Everyone was hating it, hating it, hating it, hating it, hating it, hating it. Still, and then all of a sudden, right around 30s, everyone started loving it. So if you looked at it, the swoop, you could have bought when it broke above this January area. If you could have bought, because it has a swooping upwards motion, you know, kind of like that wave I was talking about. It's going up. Or to be safer, you buy above this cluster or area, since that's basically the same. So you would buy right above, you know, above this area. And to be safer, I would even have, I didn't do it, but I mean, I day traded this stock a whole bunch of times, but to be safer, you would have bought above the high of the IPO day, and you would have bought in there, and then you could have rode it all up. And I'm not just saying that because I see all this price action. I don't care about that. I'm just saying, I'm just reading this chart on the spot. I'm just saying, you know, this is a swooping upwards pattern, and so now it's riding and hugging this line really nicely. So since it's hugging this line so nicely, but yet you did have this big away from the median sideways action, so I still hold true to what I was saying, but that was just a nice entry you could have taken, either there or above there or above there. And then see how you got this little swoop? These are always good in the market. They're called J-hooks. And when you, this is called a fry pan bottom, because it looks like a fry pan. See, it's got a handle, it's got a fry pan, and that's very bullish, and that's why it went up, because you have the fry pan, you got the handle, and then it tends to duplicate the low and the high of the fry pan, which is at 33 area down to 17, so that's, you know, we'll call it $17, then 33 onto the 17 is 50, and so that's where it the fry pan should have gone to, as it did, and that's why it stopped there and then fell down, because it met its target of the fry pan. So this is a J-hook. Those are very bullish. When you see those rounding bottoms, that's what I'm talking about. You want to get in and enjoy these rounding bottom patterns. When it's rounding like this, like over the top like that, like a mountain, you don't want that. But then afterwards you see it kind of rounded down and went up. That's what you want. So if you wanted to, you could have taken a trade above these highs here, got in, because it's a rounding bottom, to J-hook, buy above these highs here, get in, and you could have rode it all the way up. You could have done the same thing here. J-hook, buy above these highs, right, get in there. It would have gone sideways for a little bit, but then you would have enjoyed that nice upside. Now, had you known to get out before it dropped back down, who knows? But at least you see that it was a potential trade. All right, now let's drop down to the day. I'm going to keep this very short. I just wanted to give this little taste to everybody, a little free webinar for to do my part for Giving Tuesday. So let's activate that. I want to change this to 3 years so we can see the entire life. Now this is the entire life of Facebook again, and this is a day chart, which means, if you don't know, that every candle is 1 day. So when you're looking at the stock market and you have your charts, whether you're, you know, a novice and you have your Scottrade, or you're a pro and you have your MT4, you want to do what's called a top-down research, which is what I just did and what I'm doing. That's start with the big picture, then go to the middle picture, and then get to the smaller picture. And you can even go smaller. This is every day. You can look at every hour, and they all tell a different story. But that's what you want to do. Whether it's looking at the stock market or looking at one stock like Facebook. It's called top down. Start with the month, then go to the week, then go down to the day. And when you look at all three of those pictures, you'll get a nice encompassing idea of what the stock has done, is doing, and might do. So here we got the sideways again. See this 34 area. This is called a gap, which means that, see, remember I said the green is greedy, very greedy. They were so greedy that they were willing to pay way up here for it, 33 from 26. Now, I don't remember what event that was. That could have been an event, could have been earnings, probably was earnings, but that's what a gap is that you're so greedy and so excited on that particular stock that you're willing to pay a much higher price. Happened again here. From 55, it gapped up to 60. So I don't know, again, what that is, what that event was, but that could be earnings again. And so it gapped up, and the buyers were willing to pay 60 for it because that's what they felt it was worth. And as you notice, it gapped up above the median. That's also an important thing to keep your eye on. So this gapped up, gap and go, gap and go. It gapped and it went to the median. You see that? That's where it went right to the median, stopped, swooped down, came back to the median, went above the median, which is extreme behavior, and it couldn't hold it up there, and then it came back down, came under, and then you got another gap here. They wanted to pay for it higher the next day, so they did. It gapped above the median line again, as you notice. That's a very important line. And then look how it rode the line. Sometimes it'll do that. See that? Isn't that cool? It rode the line right up. I mean, that's pretty neat. And then you have a gap down, which is the opposite of a gap up, and this is negative. So it just dropped down, and the sellers got so scared that they were willing to sell it at this low price on this particular day because of that news or event. And so now this, as you see here, this little island of price cluster is just kind of by itself, hanging out naked. So that's very scary. So this is not something. It's called an island, and you can see it just represents an island, and it's by itself, and it doesn't have anything holding it up, and it's very scary. That's not something you want to be buying. So that's very bearish, and that could easily fall down. It could easily go up to the median line. We don't know, or try to test and go back to this all-time high right here, which is where which is what stocks like to do. So it might go up there, but still, it's a very scary thing when it's all by itself like this and not attached to anything, and it's got nothing but, nothing but floor below it. So just looking at the overall picture on the everyday chart, again, it's kind of curling, rounding, if you will, rounding over. It's curling, and so that's implying also that it might be coming down. Now, where it comes down to, I don't know. It could come down to right here. It could stop right there. But it's just this overall, kind of mountain-looking top is a very bearish signal. So I would not be going bullish on Facebook, considering the monthly implies It should be sideways until March or September. The weekly implies the same thing, and this is implying the same thing, but it's also implying short term. It's indecisive. So I would not touch it here. Wait for confirmation. Wait to see if it actually is trying to go up to 81.16 and test that high. And if it can break that all-time high, that's a major occurrence. Think about it. This is the highest price this stock has ever traded in its life. If it can go to 81.17, that is a major, major, major event. So if it does go up there, you could put a buy order in at 81.17, and you could ride it all the way up to 84, because it's probably going to try to go back and touch this line. So put a buy order in at 81.17. If it does go up there and breaks that, that's a huge break. And then just put a sell order in at 84.30, whatever, 84.19, whatever. And then you could even have a stop loss a few pennies below 81.16. I mean, that's, you know, if it falls back below, why do you want to be in it? Because the whole concept of that trade is the break and run. So there. I just gave you a free trade for Giving Tuesday, free chart analysis. That was on the spot. I had no idea what I was going to say or do. So everyone have a great Giving Tuesday. Please pay it forward. Give something that you have to offer the world today. And everybody, good luck.